Starbucks is a well-known company. Many people enjoy their coffee. They have stores around the world. People see the green logo and think of coffee. Starbucks is more than just coffee, though. They sell tea and pastries too. They even have sandwiches and snacks. People go there to relax or meet friends. Their goal is to be a third place. Not home, not work, but somewhere comfortable in between. This makes Starbucks a part of many people's lives. Starbucks makes money in a simple way. They sell things, just like any other business. But what sets them apart is how they turn a simple cup of coffee into a global brand experience. Every day, millions of people walk into Starbucks stores around the world, not just for caffeine, but for the atmosphere, the convenience, and the sense of community. Their main products are drinks, and these drinks come in a wide variety of flavors, sizes, and customizations. Whether it's a classic brewed coffee, a fancy latte, or a seasonal special, there's something for everyone. This includes coffee, of course, which is the heart of their business. Starbucks sources high-quality beans from around the world, roasts them to perfection, and serves them fresh to customers. But they also sell tea, smoothies, and other beverages. These options attract people who might not be coffee drinkers, expanding their customer base even further. Food is another way they make money. Starbucks offers a range of food items that pair perfectly with their drinks, making it easy for customers to grab breakfast, lunch, or a snack. They have pastries like muffins and croissants, which are baked fresh and displayed to tempt customers as they order. They also offer sandwiches, salads, and snacks for people who want more than a drink. These options make Starbucks a convenient stop for a quick meal, not just a coffee break. Starbucks makes money when people buy these items, and the more items a customer adds to their order, the higher the sale. The more they sell, the more profit they make. With thousands of stores worldwide, even small purchases add up to big numbers. They also try to keep costs low for ingredients and supplies by buying in bulk and managing inventory efficiently, which helps them maximize their profits. This careful balance of selling a wide range of products and controlling costs is how Starbucks continues to grow and make more money with every sale. Starbucks is a public company, which means it is owned by many people who hold its shares. When a company goes public, it lists its stock on a stock exchange, allowing anyone to become a part owner by purchasing shares. This means people can buy and sell shares of its stock through the stock market, just like they might buy or sell any other item. Investors use online platforms or work with brokers to trade Starbucks shares, hoping to benefit from changes in the stock price. The stock market is like a giant auction house where buyers and sellers negotiate prices for shares. Every day, thousands of trades happen, and the price of Starbucks stock is determined by what people are willing to pay at that moment. The price of Starbucks stock goes up and down throughout the trading day. These price changes can be small or large depending on how much demand there is for the stock and what news is affecting the company. This depends on many factors such as how well Starbucks is performing as a business, the overall economy, and even global events that might impact the coffee industry. One important factor is how much profit Starbucks is making. If the company reports strong earnings and growing sales, investors may feel more confident, which can push the stock price higher. Another key factor is how optimistic people are about the company's future. If investors believe Starbucks will continue to grow and succeed, they may be more likely to buy shares, increasing demand and potentially raising the price. Today, Starbucks is a well-established company with thousands of stores around the world. Its brand is recognized globally, and it has a strong presence in many countries. It has a long history of success, having grown from a single coffee shop to a global leader in the coffee industry. This track record can give investors confidence in the company. Because of its reputation and performance, Starbucks can be an attractive option for some investors who are looking for stability and growth in their portfolios. However, it's important to remember that past performance does not guarantee future results. The stock market can be unpredictable, and even successful companies can face challenges. Before investing in Starbucks or any other company, it's wise to carefully consider the current market conditions, review the company's future plans, and think about your own financial goals and risk tolerance. Starbucks is not just a place to grab your favorite coffee, it's also a company that values the people who invest in it. To show appreciation for its shareholders, Starbucks has put in place several ways to reward them for their trust and support. These rewards are designed to make owning Starbucks stock more attractive and to share the company's success with those who believe in its future. One of the most common ways Starbucks rewards its shareholders is by paying out dividends. Dividends are regular payments made to shareholders, usually every quarter, as a way of sharing the company's profits. Think of a dividend as a thank you note from the company, but instead of words, it comes in the form of cash. When Starbucks does well and earns profits, it can choose to distribute a portion of those profits to the people who own its stock. This means that simply by holding Starbucks shares, investors can receive a steady stream of income in addition to any gains from the stock price going up. It's a way for Starbucks to share its financial success directly with its investors. But dividends aren't the only perk. Starbucks also rewards shareholders through a process called share buybacks, which is another powerful tool for returning value to investors. In a share buyback, Starbucks uses its own money to purchase shares of its stock from the open market. This reduces the total number of shares available for trading. With fewer shares in circulation, each remaining share represents a larger ownership stake in the company. This can make each share more valuable, potentially boosting the stock price and benefiting existing shareholders. Both dividends and share buybacks are important ways Starbucks can reward its investors. They provide both immediate and long-term benefits, making Starbucks stock appealing to a wide range of shareholders. However, it's important to remember that these rewards aren't guaranteed. The company's ability to pay dividends or buy back shares depends on its financial health and future business decisions. So, while Starbucks has a history of rewarding shareholders, there's no promise these perks will always stay the same. While Starbucks can be an appealing investment, there are also risks to consider. Competition is one risk. There are many other coffee shops and cafes. Starbucks needs to keep innovating and attracting customers. Economic conditions are another risk. When the economy is doing poorly, people may cut back on their spending. This could hurt Starbucks' sales. It's important to remember that all investments come with risk. Before investing in Starbucks or any other company, do your research. Consider your investment goals, risk tolerance, and financial situation.